Hello everybody, welcome back to the Bullish Bears analysis, and today I'm going to be talking about Grab. I've decided to make a video on the stock as I've seen its coverage explode over Twitter with a lot of bullish and some bearish viewpoints. As you can see here, the stock's increased by 9% in the last week and over 6% in a day. So people are starting to look at this stock. So first let's see and talk about what Grab does. Grab has entrenched itself as the backbone of South Asia's digital economy, fusing ride-hailing, food delivery and financial services into a sprawling integrated ecosystem, with its website calling it a super app. It doesn't just fend off Uber, which bought a 27.5% share of the company, it absorbs its competition, consolidated market dominance and reshaped its narrative from a cash-burning, high-growth gamble into disciplined, self-sustaining enterprise. If you look at the financials, today with a market capitalization cut. As we look into their financials, today with a market capitalization hovering around $20 billion and a war chest of $6 billion in liquidity, the company presents a valuation that on paper appears reasonable. The financials underscore real progress. Revenue climbed 17% year on year, or 20% in constant currency, with EBITDA remaining the black in the first 5 consecutive quarters. However, for the first time, Grab has crossed the threshold into GAAP profitability, a milestone that often signals a turning point for investor sentiment, with analysts also projecting Grab's revenue to grow at a compounded annual growth rate of 14% until 2026. Thus, a pro about Grab is that it does have strong financials, but the question is, does that actually translate into explosive upside? Not exactly. Now looking at the negatives, the emerging bullish thesis paints Grab as the next breakout stock, a dominant super app poised for exponential expansion. Yet this narrative glosses over fundamental structural limitations. Grab is a well-run, deeply embedded regional player, not a disruptive, high-growth machine, and that distinction is critical when assessing its long-term potential. The optimism surrounding Grab hinges on the notion that scale and network effects will perpetuate a continuous expansion flywheel. The reality is far less boundless. Ride-hailing and food delivery, while indispensable, are finite markets with natural saturation points. As penetration levels stabilize across core geographies, the breakneck growth that defined the company's early years inevitably slows. Moreover, these industries are inherently capital intensive and operationally demanding. A relentless cycle of subsidized incentives, logical upkeep, and infrastructure investment. Even Uber, with its global scale and first mover advantage, has struggled to transform mobility and delivery into lucrative high margin business. If Uber, operating in high income markets, hasn't cracked the code, it's naive to assume Grab will defy economic gravity in a region with lower disposable income, and at its core, Grab isn't an explosive disruptor poised for an outsized market re-rating. It's a strategically sound, well-executed business within the constraints of its industry. Solid, yes. A moonshot growth story? Maybe not. Investors chasing the next big breakout may want to recalibrate their expectations accordingly. The company's financial services segment, while growing rapidly, operates with a highly regulated environment that makes it more of an incremental business than a disruptive one. Loan volumes have surged 81% year on year and deposits are up 50% quarter on quarter, but these aren't metrics that command premium valuation multiples. Grab is expanding access to financial services, not fundamentally changing how the industry operates. Unlike true fintech disruptors, which create entirely new financial infrastructure, kind of like SoFi for example, Grab is still working within the existing banking framework, an advantage in some ways, but not the kind that leads to exponential valuation re-ratings. Additionally, the competitive landscape in digital banking is intensifying, with additional banks and fintech startups aggressively entering the space, preventing Grab from establishing a monopoly in this segment. Its geographic concentration further caps its growth potential, as Grab is deeply entrenched in Southeast Asia, but its ability to scale beyond this region is limited by regulatory, economic, and infrastructure barriers. Many of the biggest stock winners of the last decade achieved this success by expanding into multiple large markets. Grab, in contrast, operates with a relatively fixed addressable market, without a clear pathway to replicate its dominance elsewhere. Unlike Uber, which maintains a global presence, or Meituan, which benefits from the scale of China's domestic market, Grab lacks the international expansion potential that often fuels long-term stock appreciation. Given these constraints, the current market enthusiasm seems oversaturated. At its core, Grab is well managed, regionally dominant business, but the expectation that it could 3x or 5x from here ignores the nature of the model. While the valuation isn't unreasonable, its enterprise value sits at roughly $14 billion after accounting for cash. So it's also not that deeply undervalued, as some people say on Twitter. Its core industries, mobility, food delivery, and financial services, all face inherent margin pressures, making structural profitability improvements a slow grind rather than a transformational leap. But more importantly, there's no obvious step change growth catalyst. The most transformative, long-term winners don't merely participate in markets, they redefine them. They birth entirely new industries, unlock vast untapped revenue streams, or revolutionize monetization models to a degree that reshapes financial landscapes. Grab, however, does none of these at a scale that warrants that further some investors have assigned to it. Yes, it's a formidable regional player, boasting a strong competitive moat in Southeast Asia. Its operational efficiency is commendable, but structural advantages and competent execution alone do not create exponential returns. The companies that deliver outsized gains over a decade are those that fundamentally alter the game, not simply play it well. Grab remains tethered to a business model that, while stable, lacks the explosive growth and margin expansion that separate market leaders from market disruptors. For investors seeking a steady, well-managed company with moderate upside, it's reasonable allocation, but for those hunting for asymmetrical return potential, the kind that emerges from business with paradigm-shifting strategies, this isn't where the gold lies. The next wave of market-defining companies will be the architects of change, not just participants in existing ecosystems. Grab is a good business, but the question you have to ask yourself is whether it can be a breakout stock. Now looking at the overview of what I've just said. The pros. Well, Grab does have little competition, with Uber holding off and instead buying a stake of the company for 27.5%. So even if there is little capacity for growth within the market, at least they aren't losing out that juicy golden market share to other competitors. And then again, Grab is now a super app used by 30 million users daily, which does give them a constant stream of returning customers. As the app becomes built into users' daily lives, they can become dependable and rely on the app, creating a solid consumer base, which gives it returning revenue, and therefore possibly decreasing their consumer acquisition costs. So they don't really need to constantly find new consumers if they already have a core base spending. And look, their financials do look strong, as mentioned before, and there is quite a lot of retail hype now, especially on Twitter. And as we know, retail hype can play a massive role in stocks, as seen with like the massive bull run of Palantir, or even Hood, or Hims Health. So many stocks have been driven by that retail investor base, so that could be something to look out for, despite the cons. Now, for the first con, brings into question how much capacity it does actually have left for expansion. As we see here, it's only dominant in one regional market, and eventually that regional market will become saturated faster than a lot of people think. As you know, GDP per capita in Southeast Asia is quite low, so there's only a certain limit which you can squeeze revenue off of consumers, you know. Another thing, these type of businesses have small margins. As you can see with Uber, they have now started to latch unnecessary fees onto its platforms like Uber Eats, with the food on the website already having a 30% markup than its normal store. If I show you something here, this is a receipt from someone in the US, I believe, right? And look, they have, obviously now they have priority delivery, that costs you $1.50. You have tax, then you have the service fee, that's $5. You have driver benefits, you have the delivery fee on top of that. And where I'm from in the UK, you also have stuff like small package fee. So if the package is deemed too small, then there's like an extra fee on that. And even though they've added stuff like Uber One, which is their like subscriptions-based premium offering, you still have to pay fees on top of that. It's crazy. It's ridiculous. And arguably, Southeast Asians can't afford those higher fees, as the income is over 10x less than Europeans or the West. So all these high fees, when when Grab tried to increase their profit margins after saturating the market, consumers may look for other alternatives. They may think, okay, maybe this is not worth my money or time. And then going back to the last con, Southeast Asia is a cash dominant society, and with Uber, for example, in countries such as India, the drivers usually they use the Uber app to pair with a consumer, and then what they do is they make the consumer cancel and then just take the cash instead. So they aren't really getting the profit through the app, are they? That profit margin just diminishes. So if this is a common reoccurrence in Southeast Asia, it's not really a good look for Grab, as they are missing out on core revenue there. So all these things are things to think about. I think this stock, look, it's already jumped 8% today, as you can see. Like, the stock, also 6% now. Sorry, my bad, 5.71%. The stock has seen a massive upside, and if I go into the 3-month period, 16%, the 1 month, 16% in 1 month, 50% in the past year. Look, investors are seeing an upside into why to invest in Grab, but there are quite a few cons. Look, you might be like, oh, okay, I'm only a short-term investor. All these cons listed here are quite long-term things. You know, how long will it take for the market to get saturated? It won't happen for the next 5 years at least, right? You could already call off half a decade. So even if you invest for half a decade, for 5 years, and then sell as a short-term investor, the stock might be good for you. But as a long-term investor, there are several questions on growth and profitability within the space. So I would hold off if you were a long-term investor. But yeah, I'd love to hear your opinions like always. Thank you for watching the Bullish Bears analysis. And leave in the comments actually if you want any more suggestions on what videos to do. I will do a Palantir video next, I think. I do have a list. Let me quickly find the list. The videos I want to make are Palantir, Hims and Hers Health, Robinhood, AMD, just a general thing about Trump's impacts on tariffs and stocks. Maybe a portfolio update. You know, if I go to my portfolio right now, today's been a good day for SoFi. I'm quite heavily into SoFi. And look, just off today alone, I made £300. And Max, I started investing in May. And since then, look, nearly 100% return. So I have been doing well. I also have a little diversified portfolio here. So if you do want a portfolio update and what I invest in, I will do a video on that. And I will show you guys and my like why I did it, like the knowledge behind it. So yeah, thank you for listening, and I hope to see you soon next time.